Good evening, all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for Tuesday. This is, by the way, the shortest Sunday of the year. You know that. Tomorrow we get 2 more seconds of sun. So we're turning the corner. I'm already looking to spring, although it's the first day of winter. All right. And it was a happy day. I got the smile on the face. Why? We had a big up in the stock market. Is it the beginning of the Santa Claus rally? I don't think so. I think it's the end of the big break. Little difference into a pause. That's pretty much what I'm looking at in the market. I see that the interest rate futures peaked out where I thought they would in many markets, turning back down, but I don't think there's a lot of juice on the downside either. So I think we're going into one of these type of trades through here, and you want to pay attention to them. You're going to see that in a moment. I also went to the new Meta. So I dropped ARK right now. We know it did terrible for the year, so I don't care what it does in the last week of the year. I'm going to start looking at Meta, and that's the old Facebook, as you know. And that's because you're getting some death crosses, you're getting other plays in it. Let's go to Tesla, the bar chart. Look at how this came down and turned. Where do you think it turned? If you take a look at today's low, 886.12, what was the gap here? It starts at 890.96. Right on up. You filled the gap. I think I'm not the only one that sees that. I think that other noted chartists are seeing that too, so you got to bounce. That doesn't mean the market is through on the downside. It could, but it's the area. I think if you're bearish, you have an area that you should have come out on, call it a year. And you walk away and you come back to the market in 2022 looking at it. You got a combination of the 100-day moving average of close there. You have the Bollinger Band right there. It's exactly what I teach in my course. You're in that zone where you could rally and see resistance, hopefully around the 1017 level. But if you get there through this high, you break the downtrend. You are in a downtrend. Is the market embedded? Yes. So let me explain. You have both numbers today under, and this was the close, under 20 yesterday. Let's go another one if I can get it to do it. Come on. There we go. Under and under. It's your 4th day of it. So is the market being sold? Not today. Why? Take my enhanced Bollinger Band course. It's a classic day as to what not to do. So up in this area, a little bit higher, that's where the shorts probably are going to take a look. If they want to sell going into the end of the year, do they hit the market, realizing that if you lose the embedded reading with the red line over 21, they'll call it a year probably on that trade. Apple holding where it should have. When the market lost the embedded reading back here, I said we're probably headed to that 18-day average, and that's where the battleground will be. It's where you're at. Now, you can get a bear signal out of this. You take out yesterday's 167.46, you open up the door theoretically on a chart to go back here. You're not oversold. Momentum could pick up there. Not saying it's going to happen. Right now, you have nothing on the chart. While the swing line is down, as long as the bias is up, which means you're trading over the line in the sand, that 18-day average of closes, as I like to label it, that gives you bias up. The two negate each other, and momentum is flat right here. AMC, let's thank Spider-Man. Now, I can't wait tomorrow for my HBO Matrix. Can you? I mean, I love Keanu Reeves and all that, and it's been years. I just can't wait to see the new one. I'm not going to a movie theater with COVID as bad as it is, but I will most certainly be at home on my HBO Max watching it, probably as soon as it comes out. You have the higher lows, higher highs, right into the 200-day average. So when you're under the 200, when you fall to it, you often fight to find support. When it fails and you come back, you often, the word isn't always, it's often, very often, you'll fight at that number as it's a resistance point. Clear all this and you open the door up to get back up to the upper Bollinger Band. So we'll see what happens. But certainly the trend up, the bias up in the market into the first level of resistance. We'll see what it can do with it. Now, Meta platforms. We haven't talked about this. The problem that obviously Facebook has for the year of 2022 is going to be massive lawsuits on everything coming against it. I mean, if you go on and you start reading Market Watch and some of the other pages, you can get a real good feel as to all the lawsuits that they're facing. The trend is clearly down. The market, again, fought a battle trying to find support between the Bollinger Band, the 100-day average, back and forth in there, still there. This was as of today. You can see what's going on. Clear that, you might go up to the 18-day average. Is there anything on the chart that can turn bullish? That's the issue. No. No matter what you do, if you rally up here with a straight line, you'd have a lower low and a higher high. So the answer is no on that. In the industrial sector, certainly looks to me like yesterday was a blow-off. What did I say when you went to the lower band? In the mornings, at 9 a.m., I start recording typically my morning Spider subscriber video. When you're down in a market like that, I can prove what I'm saying. I'm telling my traders, that's where I think you've got to be. If you're short under any technique you have, that's where I think you cover your shorts and you walk away. You're not embedded. You're hitting that number for the first time. And there's some other things that I talk about in there. You'll see that on a number of these charts. I feel good that we're getting a rally. There's nothing here that says, oh, the downtrend is over. You still have plenty of resistance between the 200-day, the 100, and the 18. And if you'll notice, the 18-day average got under the 100. That's a bearish piece of action on it. In the semiconductors, okay, Micron, right through the roof today. And I can't imagine that all these semiconductor companies aren't going to be looking, number one, at stellar earnings. Number two, they should be doing CapEx and expanding. There's so much demand for their products. And there's going to be more demand for their products as with the wisdom of the Biden administration putting on these new rules for cars, you got to build more electric cars to get down there. I don't know how else to do it. To get to there, I was looking, I think you have to have a car get what, into 55 miles an hour, your fleet as a manufacturer, number by 2026, 4 years from now. My smart car, and I do have a smart car. I've had it since they came out in America, the Brabus version. Love the darn thing. And I get 40 some odd miles to the gallon. It's a little racing version. It's a phenomenal little car. I've had everything, folks. It's one of my favorite. I had an Isetta. Remember those that opened in the front? That was my other favorite car. Some always have something. Lower highs, lower lows, down here fighting it, coming back up, 18-day average resistance. But remember what I said. I think the longer-term boys are looking at that as positive. You're still bearish in CNBC. You haven't lost the embedded reading. You are losing it in THCX, another variant of this ETF. So you want to look at that also. But keep your eye. If you're losing it in one, sometimes it goes to the other, but still a very bearish chart, not showing anything good. Home builders, what do you do the first time you hit a lower Bollinger Band on that type of decline? Out. What do you do when you hit it on the way up? Out. Learn the course. Take my enhanced Bollinger Band course. You will learn this and you'll have a master's degree, maybe a doctorate in Bollinger Bands and understanding my theory of it. Everybody's got theories. Mine apply, and I think you'll see it over and over and over. It's one of the most popular things I've ever done. In XLE, lower highs, lower lows. Look where you're fighting for the support. 200-day average, Bollinger Band 100. Why would you press the short side into that? That's a cover everything number as I see it. Not buy. Still, trend is still down. You wait and you see tomorrow what the market's going to offer. All these trends are still down. You're not hearing me say trends are up. But you got to zones where you're ready for bounces in them. That is the point, and that's why I started this off and said to you, do I think the Santa Claus rally is here? Well, I can't on what we just saw. Gold is miserable. It's just stuck right in here. Accept it. When it gives us a play, we'll do it. XME got interesting, though, today. Real interesting. As you come back to the gold miners, I think that you're going to get that sideways action out of here. The trend is up. The bias is down. Any close over the 18-day average will be a positive in this market, setting up for a potential test of 31.93 to 32.23 until you take out yesterday's low of 30.15, at least my opinion. I'm going to copper now. COPX. Still in a downtrend on this, right into the key resistance area. The futures aren't looking that way. When the two fight each other, I go with the futures over this because this is based on the futures, but it's still bearish until and unless you take out right here, 36.66. So what do I think the pros did today? Well, I think some of them that have covered shorts might have put them back out here with an 80-cent risk on the trade to see what it's made out of. TLT, today was the breakdown day right into the 100-day average, and for all purposes, you got 16 cents away from the lower Bollinger Band. I think you saw short covering coming into the market. That does not mean a trend change. The trend is now down. I think it's too oversold to attract new money right here. Last in the euro, you don't want to trade the sideways action. Let it spin. It'll tell us which way to go with it shortly. The longer it goes sideways, the bigger ultimate move. Be patient with it. And don't be patient with learning. You know, I want to be your guy that in the mornings, ideally, you take our combo package where you start with your futures. They're out to you by 6:15, 6:30 Central Time, the video. But then you follow up with this if you're an ETF trader. And why? Because how many ETFs are based on futures, my friends? DIA, the Russell, SPY. I can go on with TLT, GLD. I can keep going for you. COPEX, we just saw. I cover all this. So I want to be that guy that you say, I'm thinking of this trade. What does the chart look like? I see what it looks like to me. What does Ira think about it? And for $8.95 for 30 days, you decide, is it worth it to you? What's beautiful on our website is when you get in there, you can go in and manage your subscription over and over. You can increase, you can say, you know, I'm just going to take the deal. I'm going to buy the 1 year. It's so cheap compared to what it is. Each one of my subscriptions of these, 24 videos every 30 days. It includes weekly ones for the longer term play. And during the week, I will look at weekly charts, giving you the longer term play, because not everybody likes to look at just the daily charts. That's all I can do is push it to that. You've seen all the offers. Got Ira Epstein, under the word research, learn about it. I'll see you tomorrow.